Time to bring in our next guest, Ivan Feinseth, Senior Partner, Chief Investment Officer, and Director of Research at Tigris Financial Partners. Ivan, welcome to the show. I just wanted to get your take here on the overall equity market. Had some weakness earlier this week, but kind of the ship was righted on that on the back of Tesla earnings. What are your thoughts here for equities?
Well, it doesn't go up every day, but it has gone up a lot of days, and the momentum will remain to the upside. The catalyst now is strong Q3 results, and also the Fed is squarely on the side of the bulls. So I think we will easily see the S&P 500 break through 6,000 by the end of the year, and looking for another strong year next year.
Yeah, and when you take a look at this, we've got the election coming up in about a week and a half. That might be a catalyst. Big, heavy week next week as far as data and earnings. But it's hard to stop this momentum, Ivan, because I keep on hearing this rhetoric that even if we do get that small pullback like we did earlier this week, it's going to get bought up relatively quickly. Is that due to all the money on the sideline that's pouring in, or is it just the outlook that, hey, the economy is doing well and corporate earnings are doing well so far? Is that the reasoning that we're seeing the rally continue?
Well, the cash on the sideline and the reaction to the buy the dip has worked. So as long as the market investors keep buying the dips and the market continues to recover, they will continue to buy the dips. Then the fundamental positives are the $6.5 trillion sideline cash, the strong cadence of corporate results, the AI spending investment theme is very powerful. Mm-hmm. It's in the beginning, and we're seeing that both, the companies corporate America is spending on AI. So the recipients of this spending right now, like the processor manufacturers, including NVIDIA, the cloud service providers like Microsoft, Google, and Amazon, they're all the enterprise software companies like MongoDB and Monday.com and then Oracle are all benefiting from these trends. And this trend has a lot of legs.
Yeah. And, we heard from some of the major tech companies over the last couple of quarters where they're not pulling back on spending at this point, Ivan. They're actually ramping it up. They want to get ahead of the game here. And you mentioned it's in the early stages of this. We've got a lot of earnings next week, Ivan. Can they sustain this CapEx spend? Because if you take a look at the monetization of AI, we've yet to see that fully, besides maybe, the picks and shovels within like NVIDIA and some of the other chip makers.
Well, because it's in its infancy. Yeah. And we're starting to see things that are incorporating AI, and certainly Facebook has been doing it with a lot of success for some time. And we're also seeing behind the scenes where, companies are using AI models for pricing, for supply chain optimization. So it has been in play for a while. In fact, a few months ago, the CEO of Royal Caribbean said in a meeting that a human has not made a pricing decision on their website in over 2 years. So they've been using AI for a long time, as have a lot of companies. And you're going to see this come more to the forefront. But this is a long-term trend, and we are in the beginning of it.
Yeah, I think that technology causing margins to expand a little bit during this earnings season, that's really key. Even if you're seeing maybe some weakness as far as revenue goes, margin expansion is what they need. But Ivan, I kind of wanted to focus a little bit more on the tech earnings next week. I know you put out notes on Microsoft and some others. Who do you expect to do well next week? Because a lot of these stocks are at or near their all-time highs, whether it's Apple, whether it's Meta Platforms. Microsoft pulled back a little bit, but it's going to be a big week for earnings.
Definitely Facebook. I think they're going to just continue to have strong quarter after quarter. So will Microsoft. I think that Facebook will continue to make new all-time highs. I mean, Microsoft is a little bit below an all-time high, but there's a lot more moving parts to its business, but overall, I expect the business trends to remain strong. And Apple is perplexing in the sense that everybody's trying to measure the iPhone 16 sales. There was one analyst talking about weakness in iPhone 16 and iPhone 17, which is obviously not out yet. You're going to see that the iPhone 16 is outselling the 15. And as we start to get further upgrades to the operating system. When iOS 18.1 comes out, that will start to have Apple Intelligence, and more people who start to use Apple Intelligence and talk about it will drive more and more people to use it. And I think you will see a further boost in iPhone sales. So I am not counting out Apple.
Yep, you can't. That ecosystem built up did get downgraded by KeyBank earlier today, $200 price target, but because valuations are starting to grow, and maybe that super cycle doesn't kick in until they release that the new iOS with the AI tools, and that's on the 28th next week. So that might be a catalyst for those shares. But if you take a look at a name like Amazon and the health of the consumer, I know cloud is their moneymaker, but the health of the consumer with the jobs numbers coming in, better than expected. We got the unemployment rate under 4.1%, wages going up 4% year over year. So that's signaling that the consumer is still going to be strong during this holiday shopping season. Is that your perspective here?
Well, right now there are expectations for between a 2.5% and a 3.5% year-over-year increase for holiday sales. I think that it could surprise to the upside. Jobs remain strong. You can see the consumer, there's a divergence between the consumer sentiment measurement, which is expected to come in about 69.1. It's down significantly from the levels of over 100 we saw, over a year ago, but consumer actions diverge from consumer sentiment. And one of the things that continues to be incredible is consumer spending on travel, which is highly discretionary, but still, airports are packed, airplanes are packed. The cruise industry is doing incredibly well. So spending on travel is a great indication of the health of the economy, and from that standpoint, it is strong. And I think we're going to see a surprise to the upside in the holiday season as well.
Yeah, real quick here, Ivan, before we wrap up, you look at the GDP, Atlanta Fed GDP now continues to move to the upside, kind of reflective of the health of the consumer. And historically, the Q4 is always the strongest. So, you're talking about the NRF coming out with 2.5% to 3.5% potential gains for this holiday shopping season. If it does go higher, is that just clear the way to 6,000 for the equity market?
Absolutely. And look, the trend is to the upside. The Fed is on the side of the bulls. They are, whether they cut another 50 basis points this year or even only 25 or 75, they're still in cutting mode. They're going to cut throughout 2025, and it's all about really bringing interest rates in line with the yield curve. And the Fed funds rate has been out of line with the Treasury yield curve for a long time. So we'll see that normalize. That will be positive. I mean, right now, even with the geopolitical concerns are a major cloud on the market, and the election uncertainty, which seems to be more certain, the market is calling for a Trump win. We saw the market rise from the fall of last year into June of this year on the Trump momentum. Then we saw the shift to Kamala, the market pulled back, and now we're seeing the market gain. There is a Trump momentum in the market, and so I think the market's calling for a Trump win.
Yep. Optimism reigns supreme in equities at this point. All right, great discussion, Ivan. Have a great day.
Thank you.
That's Ivan Feinseth, Senior Partner, Chief Investment Officer, and Director of Research at Tigris.